I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. The U.S. Supreme Court ruled that Trump's reciprocal tariffs under the International Emergency Economic Powers Act exceeded presidential authority. Following that ruling, Trump replaced the IEEPA tariffs under a separate authority with a 15% global baseline tariff on Saturday. However, the Supreme Court's ruling is calling into question China's incentive to purchase more U.S. soybeans. The setback was viewed as limiting the U.S.'s leverage to press China for larger soybean purchases. On Sunday, U.S. Trade Representative Jamieson Greer said the administration expects partners to stand by recent deals. Earlier this month, President Trump said China is considering buying another 8 million metric tons of soybeans on top of the 12 million it had already bought, according to media reports. Soybeans in Brazil are trading about $1 higher than U.S. soybeans, so the lack of leverage could disincentivize China from sourcing future U.S. supplies. The U.S. Census Bureau finished catching up on its latest monthly trade numbers through 2025. Putting a bow on last year's meat trade, U.S. pork and beef exports experienced a year-over-year decline. Meanwhile, beef imports rose to a new record. Census data released last week showed that pork exports totaled 2.94 million metric tons, declining 2.3% from the previous year. Volumes to Mexico continued to grow, rising 7% year over year. However, that was offset by declines in shipments to China, Japan, South Korea, and Canada. The U.S. did see some continued demand for pork exports to Central America. Meanwhile, U.S. beef exports totaled 1.14 million metric tons, down 12% from the previous year and hitting the lowest since 2017. Through 2025, shipments to South Korea, the largest U.S. beef export market, were fractionally higher than the same period a year ago. Meanwhile, shipments to China fell 67% during the same period due to the country not renewing export registrations for U.S. processors. Beef imports continued to surge in 2025, finishing the year at a record 5.47 billion pounds. Shipments were 18% higher than in 2024. Tight supplies, particularly for lean processing beef due to reduced domestic cow slaughter, resulted in the United States being an attractive market for global exporters. So those higher shipments were led by increased imports from Brazil, Argentina, Nicaragua, and Australia. The USDA expects beef imports to rise another 3% in 2026 as demand for imported lean processing beef is expected to continue. Keeping along the lines of trade, U.S. Census data showed that ethanol exports hit a record 2.2 billion gallons in 2025. Shipments rose 12.6% from 2024, marking a second consecutive year of records. Shipments to Canada set a record totaling 792 million gallons and representing about 36% of total exports. The Netherlands, the European Union, India, and the United Kingdom represented a major portion of that total as well. Growth in the export market has been crucial for U.S. ethanol production over the past year. With growing exports and flat consumption, exports are making up an increasing share of U.S. fuel ethanol production. The latest export estimates from the government highlight how the growth is impacting domestic corn demand. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.